Ladies and gentlemen, welcome to February 27th, 2020 Daily Update with Invest with Alex. Another historic day in the stock market, as you very well know. Very impressive. We're looking at the long-term chart of the Dow Jones. I'm going to be jumping around today quite a bit because we have quite a bit of ground to follow, and we are indeed looking for a bottom, at least a short-term bottom, most likely tomorrow. Our small time turning point that I was mentioning yesterday. We will see if the market has enough power to stage any sort of a comeback. Apparently it does. Well, it looks like it does at this point in time. It is severely oversold. There's almost a near panic in the marketplace. We do have two targets for you. I'll talk about them in a second. I'll write them out as well. But going back to the long-term chart, once again, this is rather impressive. As you can see, the Dow Jones basically wiped out half of gains for the entire year of 2019 in as little as 4 trading days. So this is indicative of this particular area, the top, something we've been following for quite some time. As you know, we've been anticipating that top. We've been looking for that top for quite some time. Finally, February 19th, plus or minus 1 trading day arrived, and quite a few indices, including the S&P and the NASDAQ, topped out on that exact date. As I was talking about before, this particular gap on Monday. Let's go back and zoom in to the chart. By the way, before I do a close-up, the Dow did quite a bit of damage to the long-term trend today. You can argue that it broke a trend going back all the way to 2009. It's not a definitive break at this point in time, but nevertheless, Wilshire 5000 also took out some very important support levels that also suggest that the final top could be in. I'll talk about it in a second because there is still a small possibility that we'll see slightly higher highs a little bit later because of this gap that we saw on on Monday. Let's go ahead and zoom in, and we can concentrate on the short-term composition of the market. Let's do a 20-day chart. It's probably going to be better at this point in time. So as you can see, the pitchfork was hit perfectly here on the Dow Jones. It was hit perfectly on the S&P to the point, as you're very much aware. So what I think we're looking at, before I jump once again to the short-term work, it's important for me to remind you what I said over the last few trading days. The recent composition, the long-term composition of the market, because let's go back once again. These tops, the first top in 2008 and this top in 2008 October, were mathematically precise. If you recall, we nailed them perfectly at the time. But this particular top was always, how should I put it, not a question mark, but it was almost like a thorn in my side because it suggested something that the market has never done before. It's not necessarily impossible, but it was doing something the market has never done before. It was completing a larger structure after completing a smaller structure. What that means in terms of the geometric composition of the market, I believe at this point in time, is that the decline off of this top is going to be approximately 20,000 Dow points. So that's going to take us to approximately 10,000 on the Dow Jones over the next 2 years, and 66% decline, much more on the NASDAQ probably than the Russell. Once again, I'm not confirming this particular case at this point in time, but that's what it looks like. I've looked low and high, and I can't really explain it in terms of the geometric composition of the market in any other way. So I'm trying to verify it, and perhaps I'll do that over the next couple of weeks. Okay, let's zoom in. So if we're looking at the 20-day of the chart, if we're looking at the structural composition of the market, of course, this is the big problem. This is the big question mark, and it suggests once again that either the Dow is going to stage a massive rally in the very near future, or it's going to stage a powerful bounce into our late April, early May time turning point, at which point it's going to close this gap, then reverse and collapse into our June, July time turning point. So we have to wait and see. And I don't think we're going to have to wait and see very long because, as I've suggested before, the stock market is incredibly oversold at this point in time. There's a near fear in the marketplace. VIX, let me see, it's at almost 40 at this point in time. So basically, people are freaking out, as they should. And we should anticipate a bounce. As I mentioned yesterday, the next time turning points of any significance arrives tomorrow. If we look at the structural composition of the market and Elliott wave in particular, we can argue the following: that this was the first wave down, bounce wave number 2, this was wave number 3, this was wave number 4. I'm sorry, this long thing was wave number 3, this was bounce wave number 4, and what we currently is experiencing is the final wave 5 of this particular short-term sell-off. I'm sorry, I should repeat myself. Not short-term sell-off, of this first leg down. And once this first leg down completes itself, then we should anticipate a bounce. I would say at least into probably 27,500. We will definitely close this gap down that we saw today. It is yet another sign. Whether or not this time around we'll be able to close this gap that's all the way down up to 29,000 and beyond is remains a question mark at this stage. So we're gonna have to wait and see. So we're looking for a bottom, and I have two potential price points for you. One is located at exactly where we closed today, plus or minus 100 points. Let me zoom in to a 5-day chart. So there was an earlier point that we hit here at 25,000, 26,000 plus or minus 100 point. But as you can see, the market broke below this point. So this next point is located at 25,750 plus or minus 50 points. I'm sorry, plus or minus 100 points. It is not a very good point. As I mentioned yesterday, the mathematical composition of the market and geometric composition is very difficult to pinpoint this particular bottom because the market has been in uptrend for the entire year of 2019. So we have very few data points in order that would give us a high precision mark. So we kind of have to guess, I would say, a little bit, but some of the mathematical work that I'm looking at does suggest that this is a potential bottom right here where we bottom. Elliott wave composition definitely supports this notion. This was the final bounce and a sell-off. So it is possible we'll open with a significant gap higher tomorrow and just keep rallying to close this gap and perhaps push into the 27,500 and possibly beyond. The other price turning point is a little bit lower. It's at 25,250 plus or minus 100 points. I actually like this particular point a lot better because from a mathematical perspective, it has many more reference points. So if we use triangulation, where the first point where we bottom today has approximately 2 or 3, 3 to be precise. This one, the secondary one, has 25,250 has 5. Okay, so we have 5 different mathematical calculations coming together at that point. Typically, what that means is that that point is a little bit more relevant than the point that where we bottom today. What does that mean? Well, we have a time turning point tomorrow, a small one, and we have these two price turning points. The market is incredibly oversold. The structure suggests that it is ready for a bounce. So that's the presumption that we kind of have to make, that it's getting ready for some sort of a bounce. If you are looking to trade it, do concentrate on those points. If we break below 25,650, then that would essentially mean that we are going into that secondary point. And at that time, if you once again want to trade it, you want to concentrate at that 25,250 to take a long position, perhaps, and or try to reverse with definitely tight stop losses. You don't want to be taking out, as you can see, the stock market decline over 1,000 points within a matter of a couple of hours. So you have to be very careful here. But From a technical perspective, if you are a little bit shy of taking position, I would use this type of a trend line to basically confirm. This is not very good, but good enough to confirm that the market has bottomed and a rally is starting. So you're looking a break above this line at some point tomorrow. So if the market bottoms, hopefully at 25,250 would be a much clearer target, and then begins to rally and breaks above this line, perhaps that is where you want to take a position with a very tight stop loss. But once again, I'll leave it up to you. I don't really want to put you into or make trading decisions for various reasons, but this would be my analysis at this point in time. So very interesting, to say the least, and very exciting at the same time. Following this bounce, if this is indeed the end of it, we're going to have to look at the structure. If it's the end of this sell-off, we're going to have to look at the structure of the bounce and if it's able to close this gap. If not, then perhaps the bounce off of June-July time turning point will be much more powerful, and we'll come back to the highs once again. Anyway, market will tell us what the situation is over the next couple of weeks. With that said, that's the end of the update today. Hopefully it was fairly clear. If you have any questions, please email me. Otherwise, we'll be back with another update on Saturday morning. Thank you very much. Have a wonderful day ahead. Bye-bye.